All right, ladies and gentlemen, welcome back to my channel. Today I want to talk about consistency rules. One of the big reasons I'm making this video is this past week, Elite Trader Funding finally announced that they no longer have a 40% consistency rule. Matter of fact, I'm going to start with them first because they're the reasons I'm making this video. So I want to talk about what a consistency rule is, and also why prop firms have them and how to get around consistency rules. So they actually still have their description of a consistency rule on their site, and it explains what their thoughts were on it. But if you see right here in fine print, this policy is not applicable to accounts purchased or activated on or after August 1st, 2024. And this is a good thing. I'll explain more about that in this video. So, Elite Trader Funding said the 40% rule, which is their consistency rule, is basically that you cannot make more than 40% in a trading day of your total accumulated profits. And they gave a breakdown of what that really means, right? So if you made $1,000 in profit, you cannot make more than $400 that in a single day. And basically you can't get your payout if one of your days is equal to 40% or more of your profits. I hated that rule, and in fact I've actually been with ETF in a funded elite account, as they call it. And I remember I had like $4,500 in the account and I couldn't take a withdrawal. And it was because of that consistency rule. There was a single day where I made maybe $2,500. And I think for me to get to payout, I then had to make like $6,000 in the account to get any payout at all. And I remember I literally blew that account up chasing that extra $1,500, and I do think that's skill issue, right? Like, I think I was trading too big at the time, to be completely honest, and I blew up the account in trying to chase that $6,000. So I think consistency rules are a double-edged sword. I think in a weird way they encourage the behaviors that prop firms claim to not want. Like, this sentence starts off with we are a trading website, not a gambling website. I think a lot of prop firms love using that kind of language to kind of coerce traders into trading a certain way, and that way typically is unprofitable for the trader and more profitable for the firm, where they basically make you take a longer time to get a payout, and they collect data fees every month. And this firm right here still does that. They do offer an option now where you can pay a one-time fee for data, but they do offer a option to pay every month for data, right? So if they have you trading micros to try to get $6,000, good luck with that, right? So I think language like that, I think it's counterintuitive. I think having consistency rules makes people literally take on unnecessary risks in trying to hit certain targets to be able to get a payout. And I think as a trader, we all know that every single day is not the same. We're not going to make $300 every single day in the markets. That's not how trading works. As a trader, you're going to have good days, you're going to have bad days. And I think when firms try to cap you on your good days and basically let you blow your account up on bad days, I think it's one-sided and it's not in your favor. Where I can only make $300 in a day, but I can lose $3,000 in a day, no problem. There's no blow up after I lose $300. So yes, part of it is on a trader to manage their own risk, but capping somebody's upside and making it harder to get payouts because of that, I think that's just totally unfair. And I'm really happy that they're removing this policy. But basically, that's what a consistency rule is. They give you a percentage and they tell you if you exceed this amount of percentage of your profits, you can't get a payout until you either increase the balance of your account or reduce the percentage of that day's earnings compared to your account balance. So I don't like it, and I'm really happy that they're removing it. And the reason why I am actually talking about Elite Trader Funding is because they do offer an end of day account. I did have an account with them, end of day drawdown, and they also have a Diamond Hands account, which also operates with end of day trailing drawdown. On my channel, I make a point to only talk about firms that offer end of day drawdown. I believe that intraday trailing drawdown is a scam, and I don't like it. I think it's just a money grab for prop firms. And I think for people that are coming in and they can't afford, an end of day drawdown account, Apex or one of the other companies with trailing drawdown, it just appears like the way to go. But I don't agree with it, so I never cover them on my channel. But I don't recommend their accounts though overall because they don't have enough sales. This is not at all competitive to the market. You can get a Topstep account for $50. This is $295, and this does not include their data fee, which is $80 a month or one-time activation. So, I mean, every other prop firm that offers end of day has it for way, 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 way cheaper than this. So, until they get better with pricing or sales, whatever they want to do, I don't think this is a competitive prop firm. Let's go to Topstep. Topstep also has a consistency rule. Their consistency rule is in the eval account. So let's look at how they describe their consistency rule. The consistency target measures a trader's ability to make repeated profits while managing risk. To pass a trading combine, your best day, most significant winning day must be no greater than 50% of your profit target. Again, they're basically saying you can't get lucky with one trade, right? If you go in the account and you put on one big trade, hit your profit target, well, you're going to have to do it again the next day because your profits cannot be, from a single day, cannot be greater than 50% of your profits. So I think that's to really reduce the risk of people just getting lucky, and I understand it. I think theirs is reasonable because they only have it in their eval accounts. So they're saying, isn't it impossible to do exactly 50%? Technically, no, it isn't impossible because I've done that before. I've done exactly 50, so it's not impossible, but it is unlikely. So for them, they're saying there's like a little buffer. They won't even tell you what it is, but if you're close enough to it, they'll pass you. I like Topstep because they don't have this rule in the funded account. I think that's fair. Consistency target. Unlike your trading combine account, there is no consistency target in your funded account. That to me is fair. I understand the idea of people getting lucky in their eval and trying to hedge against that and avoid that. That's fine. But having it in a funded account that somebody's paying you for and they passed the test of their skills, I think real market conditions, like some days in the market, you're going to have great days. And why would you want to cap a great day? So you're basically like capping great days and then having no caps on bad days. So I think it's fair to allow people to have the ability to basically have not uncapped gains, but just trade how they feel that best fits their strategy. Because everybody does not make the same amount of money every single day in the market. It just doesn't work like that. They do have a hidden consistency rule in their funded account. They don't call it a consistency rule because it's not officially a consistency rule. But in order to get a payout, they do require 5 winning days of $200 plus. This still is a consistency rule, but it's not a percentage-based consistency rule. It's you need X amount of days of profitability to make a withdrawal, which is the definition of consistent, right? Like if you're winning 5 days of $200 plus, you're by definition consistent. But what they're saying is if you had one day where you made $2,000, one day where you made $1,000, and then the next 3 days you made $200 each day, you can still get your payout. And they do limit your payout. In fact, I think you can only withdraw half of the account until you have enough days of profits. Which again, that's another hidden consistency rule. Traders can request a payout of up to 50% of their account balance after accumulating 5 winning days per payout request. A winning trading day is counted when a day's net P&L is $200 or more. That's a consistency rule. So basically, if you make $9,000, you could only withdraw $4,500 until you have, I think, 30 days of trading days. So again, it's basically until you have 30 days of profitable $200 days, you basically only, like, whatever your earnings are in the account, just basically multiplied by 0.5, which is like half, because that's basically what it is. This is, again, forcing you to be consistent. They're telling you you cannot access your full profits until you have 30 days of winning $200 or more, which breaks down to about $6,000. That's a consistency rule. But I think their consistency rule is a little better in that it's not percentage based. Like, they're not restricting your withdrawals from your account. They're not telling you you can't withdraw at all because of some percentage. They're limiting you by the percentage you can withdraw, but you still have access to some of your profits. And that's why I'm a little more okay with this as compared to Elite Trader Funding, their previous policy, not their current policy. Their current policies, there's no consistency rule anymore. But Topstep, don't let them trick you. Like, they might tell you there's no consistency rule, but to tell you that you need 5 winning days with $200 or more to access half of your profits, that is a consistency rule. But I think it's a little more lenient of a consistency rule than saying you can't have one day with more than 30%, 40%, whatever it is. So, and they definitely are explicit about their consistency rule in their eval accounts, which is fine. Trade Day, one of my favorites. You guys know I love Trade Day. They were one of the first prop firms to just make really simple, easy withdrawal policies. Like, their rules back in the day was if you made the money, you could withdraw it. There is no buffer you have to hit. There was no profit targets or consistency rules. It was just if you made the money, you could take it. And one of my favorites, they have one of the best profit splits still. They give you max access to your drawdown. Still, there's no daily loss limit with Trade Day. They were one of the first firms to remove their daily loss limit on end of day drawdown accounts. So, been a favorite of mine for a long time. They also have a consistency rule. Their consistency rule is no single day's profit should exceed 30% of the profit target. So if your profit target is $3,000, you should not have any day where you made more than $900. That's number one. Number two, they have a 7-day minimum for passing their eval. So again, you cannot pass their eval in a single trade. It won't work. So for them, they actually do require consistency in the evaluation, where you have to spread your trades out across 7 days, and no single day can exceed 30%. And again, they want to see consistency. They don't want to fund people that got lucky. Totally understand that. If you have a profitable day in excess of 30% of your profit target, you do not fail the evaluation, but your profit target does increase. There is no consistency objective for funded traders. I love Trade Day because I think they try to get you as close as they can to a real trading environment where there's rules, there's limits, but they understand that they don't want to cap your upside, on good days. And I think that's fair. I think that's to your benefit as a trader. That's to my benefit. Like, that's one reason why I like Trade Day. I've bought a number of evals from Trade Day. So Trade Day is one of my go-tos, and they've been pretty good. the most recent change they made is now you have to hit your buffer to make a withdrawal. But that's fair to me. It's basically a second profit target in your funded account, but everybody has that, and it's kind of expected. So that's not a big deal to me. I think that's fine. And how do we calculate if a day is consistent or inconsistent? Again, it's pretty simple. It's math. It's profit for the day divided by total profit made so far on the evaluation to give you a percentage. So in this example, your account is at $1,800 and you made $750 of it in one day. Well, that's 41%. But if you make, let's say, $300 the next day, or $700 the next day, this is gonna go below 40%. So trade day, great for me. I think it's great. My funded futures, one of my other favorites as well. I go back and forth with them on if I like them or not, but they're good. They're innovative. They make a lot of changes in this space that I think are positive changes. They give you options and flexibility, and they do have a consistency rule on their starter accounts. There is no consistency rule on the challenge phase, meaning this is one of those prop firms where you can pass in a single day in a single trade. None of the other prop firms on this list offer that. So this is in starter and expert accounts. However, in the simulated funded stage, there is a 40% consistency rule. Also, there is no consistency rule on the expert plans. So again, the 40% consistency rule during the simulated funded stage means the profits from one trading day cannot equal or be greater than 40% of total profits made. You cannot withdraw if any of your profits, oh my God, this is wrong. Okay, you cannot withdraw any of your profits if any of the trading days is made equal or greater than 40% of the total profits. If you exceed this account, you will not be breached, but you will have to trade and make more profits until you have made in each of your trading days less than 40% of total profits made. That whole paragraph is like word vomit, but you get the message. They're basically saying you cannot take the money out if one of your days is equal to more than 40% of your profits. So 40% is pretty generous for a consistency rule. This is the same as Elite Trader Funding's old rule, and this is only on starter plans, of course. So my question is, if you want to avoid consistency rules, how do you go about doing it? So one, if you're looking for end of day drawdown, you're going to have to accept that you're either going to have a consistency rule with most companies, either in the eval stage or in the funded stage. Elite Trader Funding, they don't have an explicit consistency rule in their evaluations, but they do require a minimum of 5 days to pass. They do offer an option now where you can buy a add-on where you can pass in 1 day to technically avoid this restriction. But look at the cost of their accounts. So if you want no consistency rule in eval or funded, they offer it as of August 1st. But their payout policy is not that generous. They do have a good split of 90-10, but that's so weird. Okay, let's look at their actual policy for how do they make payouts. So this is one of my biggest beefs with Elite Trader Funding is just how their payout process used to work. You have, let's see, look, it's like a chart, it's a table, it's not straightforward. I never liked this about them. But they said once you are eligible to request a payout, you can enter a payout where you have a maximum amount you can withdraw until your 4th payout cycle. You can pay yourself as little as $100 daily or as much as you want until you withdraw the maximum amount allowed based on your account size and payout cycle. To me, that's just a lot of mumbo jumbo. It's complex. It's a lot. It still doesn't even tell you what makes somebody eligible to request a payout. But let's keep going. To be eligible to request a payout, all 3 must be met. So you must hit your drawdown, which is okay. That's fine. Active trading days. The To ensure the days you trade meaningfully contribute to account profitability, 2 criteria below must be met to receive credit for an active trading day. So you must make a minimum of $200 in realized profit. Okay, that's fine. A minimum of $100 in realized profit is required for certain accounts. These accounts, realized profit must equal at least 23% of the best active trading day P&L. Okay, that's an interesting one. It's kind of a backwards consistency rule. Your realized profit must equal at least 23% of the best active trading day P&L. That's basically saying you can't put on a micro, make $5, and call it a trading day. So they want you to actually trade. Any new best active trading day P&L will be applied to trading days that follow the date of the high. Like, this is ridiculous. This is just too much. It's either you have a consistency rule or you don't. How many days are required to get a payout? It still doesn't mention that. Here it is. A new payout cycle begins after you have acquired enough separate active trading days. So first payout cycle is 15 active trading days. That's 3 weeks. Second payout cycle, 15 additional active trading days. Third payout cycle and beyond, 10. It's just confusing. It's not straightforward. Yeah, their accounts cost a lot of money. There's a backwards consistency rule where it's like you can't just flip a micro. To me, it's just it's a lot. And then this is their consistency rule that no longer applies. But I don't like it. If you like it, you can tell me why in the comments. But they have to improve their program to be more competitive because this is too much for most people. Let's go to Topstep. Topstep has a consistency rule in the eval and a technically unwritten consistency rule in their funded, where they still require you to be consistent. They just don't call it a consistency rule because they don't require a certain percentage. But they're definitely requiring consistency to get payouts. If you want to get paid out, you're going to need a minimum of 5 days of $200 to get half of your account. To get your full account balance, you need 30 winning days. That's the definition of consistency. 30 winning days is basically 6 weeks in the market consistently of profitable days, meaning $200 or more. So that's a consistency rule, but to me, this is a livable consistency rule. Like I can deal with this because also their accounts it's $50 for the eval, the 50K, and their activation fee is like $149. Again, not that bad compared to other activation fees. So if you're gonna go for an account where you want a cheap eval or a cheaper eval, I think Topstep is pretty fair. And I think it's fair that they allow you to get your withdrawals without hitting your buffer. As long as you have 5 days of more than $200, you can take out $500 and still have an account. They don't fail your account or increase your drawdown because you took a withdrawal. So I think in terms of a long-term strategy or a long-term approach, I like Topstep personally for me. Trade Day, one of my favorites, one of the favorites of my channel because, again, they try to keep it very simple and their company is built by traders, kind of for traders, and I see that in a lot of their policies and rules. It really shows that they know what they're talking about. So Trade Day, again, consistency rule in the evaluation. And theirs is lower, 30%, meaning theirs is tighter than the other companies we've seen. But, what you get in exchange for that is no consistency at all for funded traders. And one of the best payout policies that I've seen from prop firms, from any prop firm. So let's go to their payout policy just to make sure that we're all on the same page of, how payouts work with Trade Day. But that's one of the things that makes them stand out to me in the prop firm space is just their payout policy and their rules and the logic behind their rules. So let's look at this. General questions now. The objective rules to qualify. Funded traders. Okay. Let's go to FAQ. How can I? How often can I withdraw profits from my trading account, and are there any fees? Okay. The below will apply to any new subscriptions taken out after June 20th, 2024, this year. Yada, yada, yada. Okay. A trader cannot make a withdrawal request until they have cleared the buffer. We talked about this already. A trader can draw down into the buffer when they have cleared the buffer. Minimum payout request is $250. Traders can withdraw profits whenever they like, and there are no restrictions on the frequency of withdrawal. So again, there is no 15 days here, 15 days here, every 5 days here, $200 a day, none of that. Traders cannot take a withdrawal until their trailing maximum drawdown has moved to the opening account balance, which basically means you cleared your buffer and made like $100. So again, this is simplicity. This is what you want. This is what I would want in a funded account. I don't like the idea of having a bunch of rules about I have to wait this many days and make the minimum this much day. Like, to me, it's if you're gonna have a ton of rules in the evaluation, like, you shouldn't have that in the funded. I think that's kind of what you see across the board. The easier the eval is, the harder it becomes to get payouts in the funded, and the harder the eval is, the easier it is to get payouts in the funded. That's like a general rule I've seen, but yeah, this is fair. To me, this is very fair, very straightforward. Obviously, they do have a live account and they have other rules there, but same deal. They break down the withdrawal policy they have for the funded accounts and the ability to clear your buffer before you get your payouts, which I think is more than reasonable. There are no payout restrictions for traders who graduate from a funded sim account to a funded live account, and they need a request before 5:30 p.m. Central Time, and they'll process it within 24 hours. That's incredible. They have free U.S. bank wire withdrawals free, and other ways you can get paid out. Crypto, that's pretty cool. But Trade Day, really good prop for payouts. Like, they're very simple, straightforward in their rules, and a true no consistency rule prop firm. Like, that's what I really like about them, is they're straightforward. Then there's My Funded Futures. My Funded Futures, again, there's no consistency rule on the challenge on any of their accounts, and that's incredible. That's one of the only prop firms on this video where you can pass in one minimum day. Also with a single trade. No other prop firm offers that I'm covering in this video. And the starter account, again, it does have a consistency rule, which is 40% in the starter accounts. Now, if you want to avoid it completely with My Funded Futures, definitely expert account. Expert account does have a higher profit target than the starter one, but you get what you pay for. So with them, again, wait 14 days and there's no cap on your withdrawals. You can withdraw as much as you like. You can make as much as you like on any single day with expert account, and their expert account has no activation fee. In fact, none of their accounts have activation fees. So you can actually get a starter account for $80 and go to a sim funded account with no activation fee. So in terms of cost to getting funded on an end of day account, I think this is the best buy in the space right now, mainly because there's no activation fee and it's end of day drawdown. And yes, there's a consistency rule, but again, you get what you pay for. If you want less rules about in funded or eval, expert account all the way. None of their expert accounts have consistency rules, and again, you can withdraw after 14 days with no cap on how much you can withdraw. But of course, you cannot withdraw from one of their accounts until you hit your trailing max drawdown. And the way it was in the beginning and now for these accounts is you typically, after in the beginning, you cannot withdraw your full account balance. So you have to wait a while to get the full balance. So any amount above your buffer, you can withdraw in the 14-day window after you get your account. But so if you want to avoid having a consistency rule, your options would be a My Funded Futures expert account. And if you want no consistency rule in the funded account, you'd look at trade day and EOD trader funding, which I think they kind of still have rules, or they're not very clear about their rules. And then Topstep definitely has consistency rules. They're just not called consistency rules, but they have them. Because for you to get access to your money, you definitely have to win 30 trading days, which is 6 weeks. So that's a consistency rule. But I think, to me, in terms of fairness, I think their consistency rule is fair. So hope you guys enjoyed this video. If you have any comments or questions about my opinions and why I believe what I believe, just leave them in the comments and I'll reply to you guys. So thanks for watching this video, and I hope to hear from you guys. I want to hear your thoughts on consistency rules, if you guys go for accounts that have them or accounts that don't have them. As you guys know, you guys can use my coupon code Honest Prop Trader on trade day and My Funded Futures to save money on your evals. You say whatever the promotion is, you'll get it by using my code Honest Prop Trader. I'll definitely leave it in the subscription or the description for this video. But thanks for watching.